Alright, so Tesla stock hit our target at $200 as it triggered its midterm rally by breaking our key resistance area around 186, 187, which we have talked about several times in this channel before. Now, it appears that Tesla is showing some signs of exhaustion, which is totally acceptable and even expected in this circumstance. But what if Tesla does indeed trigger a top signal below 200? How low could it possibly get? Furthermore, what about the 200 as a resistance? Is there any chance that Tesla will break this green line over here and seek higher levels? Yes, it can, and we are gonna talk about that in a few minutes. First, my name is Nathan, and you are welcome to the Finance Hydra channel. Let's start our multiple time frame analysis on Tesla stock looking at the 1 hour chart. In the 1 hour chart, we broke our previous key resistance level over here, this green line at 186. The 186 did work as a crystal clear support level 1, 2, 3 times and as a resistance level over here at least twice recently. By breaking this red line over here, again 186, Tesla triggered its midterm rally and it hit our target at $200. The $200 was a previous resistance level over here, and right now it is again working as a resistance level. Now it feels like we are showing signs of exhaustion, which is totally normal because Tesla did a very nice rally over here. However, we have some important key support levels to work with right now. First, the 21 EMA in the 1 hour chart. Only if Tesla loses the 21 EMA, we are going to see a sharper correction in the 1 hour chart, probably to this red line again around the 186, which is a very important key point in the daily chart as well. The 186 is very close to the 187 area, which is the neckline of this head and shoulders chart pattern in the daily chart. So we see a very nice and strong support level in two different time frames. In addition to this neckline, it is very close to the 21 EMA in the daily chart as well. So the 186, 187 area right now previously was our main resistance level. Right now it is our main support level. If Tesla actually corrects, actually triggers a top sign over here in the daily chart, actually loses the 21 EMA in the 1 hour chart, I see Tesla retesting this support area over here again. This wouldn't ruin the bullish bias seen in the short term and the possible reversal thesis in the daily chart as well, but if we drop below this point, then I believe Tesla will trigger a very problematic pattern. It is going to trigger a very problematic structure indicating that yes, we could drop to much lower levels. In my humble opinion, we would seek the 61.8% Fibonacci's retracement over here, filling this gap around 146, 145 if Tesla loses its key support level over here around 186, 187. Right now we are still above the support level, so okay, that's great. Probably Tesla is going to break the $200 in this scenario, but it is very important to watch how Tesla is going to move from here, how today's candlestick is going to close around the $200 resistance, this green line over here, because as I told you guys, a pullback to this support area at 187 is okay, is acceptable. It is not gonna ruin the bullish bias, but by losing the support level, then okay, then I believe we could drop. But what if we actually break the $200 from here? Well, regardless if we do a pullback to the 187 before the breakout or not, I see that Tesla, if it breaks the $200, we could easily seek the next resistance area, which is above the 210, the area between 211, 219 over here, 218, I'm so sorry, this yellow area over here. This is our ceiling on Tesla, and that's going to be our most problematic resistance level. That's going to be a very challenging point for Tesla, because just like it did over here, Tesla did a very similar pattern a few months ago on September. From August to September 2022, we hit a very strong resistance area over here, and that would be a very challenging key resistance area for Tesla, the most challenging one, because just like Tesla did over here, on August, September 2022, Tesla found a very strong resistance area around the previous top level over here after retesting the 38.2% Fibonacci's retracement over here. So as far as I know, Tesla could easily bounce to the previous resistance level just like it did over here before crashing again. The pattern is, the similarity is uncanny. So I do believe that it is still a quite delicate and problematic situation for Tesla. We have some promising signs, yes we do, but everything is possible in this scenario. So for now, all that I know is that we must watch very, very closely the $200 area, because it all depends on how it is going to react from here. If we break this area, okay, then I believe we are going to seek our most challenging resistance area. If we correct, as long as we stay above 187, that's totally fine, that's totally acceptable. Probably this candle is not going to close the way it is looking right now. Therefore, it is very important for you to subscribe my daily newsletters, check my website, join the top 5% community of traders that can actually make money while beating this market. And if you're still here and you're not my subscriber, come on, subscribe this channel, click on the like button to support me. I really appreciate your audience, my dear friends. Stay safe, see you guys.